Welcome back, guys, to another Zero DTE video, and today Ernie's going to be talking about the misconceptions of credit flies, so make sure you stay tuned. If you're interested in becoming a pro trader, check out the link in the description where you can find Ernie's course.
I would say the most popular one is something called the JOIF, or the Jim Olsen Iron Fly. What is an iron fly, first of all? Well, it's a butterfly. Instead of being long, it's short, and that's because you have both a short call spread that's providing the bearish component of the fly, and a short put spread that's providing the bullish component of the fly, and they both share a short strike. The overall strategy is short. In other words, you can put it on for a credit. A lot of people think that that really makes a difference when you put something on for a credit, as if having a credit is somehow better than putting it on for a debit, as if the trade is different somehow. That's one misconception that I like to clear up. There is no difference if I had put on a Jim Olsen Iron Fly or a Ernie Veritimus debit fly. They are exactly the same. They will behave the same. There is no difference, except for that the debit fly is far easier to enter and to exit. Why add all that complexity to your life by putting on a short fly? You'll think, well, then when I put on a short fly, all of that credit goes into my account. Right? So all of that money goes into your account, and you're saying, what? Oh, you're going to do what with that credit? You're going to spend it where? There's nothing you can do with that credit until you actually realize the trade. What I mean by that is by closing the trade. That credit is totally worthless to you. The only thing that credit might buy you is if you want to use all the money in your account to load up on strategies and take extraordinary risk, that it might do that for you. And for that reason, most brokers and others will fully encourage you to take that credit spread so that you can add more risk onto your plate, because they don't give a damn. So anyways, there's no reason why you need to put on a credit spread or a credit butterfly. Put on a debit butterfly. It'll make your life a whole lot easier, and you can just deal with what you have. So the idea behind the JOIF, or the at the money butterfly, is that you're going to put this very, very wide fly right at the money. So those short strikes will go right at the money, right after the market opens, and you're hoping to collect a quick little bit of profit. And the source of that profit will be, hopefully, the volatility crush that will happen, which will inflate the value of that butterfly very quickly, or accelerate the decay of the premium underneath. The reason why it will do this, and it won't always do it, the reason why it should do it is if volatility, like it does, I would say 65–70% of the time, goes through something called a volatility crush. So it'll come down in the very early parts of the trading day. Does it happen all the time? Absolutely not. Does it happen a lot of time? Yeah, it does. When is the best time that you're going to capture this, quote, volatility crush? I would say about 60–65% of the time it's going to happen right after the market opens. Somewhere between 5 and 10 minutes, it will start its way down. Other times it waits a little bit later in the afternoon and doesn't happen until about 10–10:30. Sometimes, on some days, it will never happen. In fact, volatility will continue to increase, and you'll be sitting there with your hands in your pockets wondering when your butterfly is going to pay. In the meantime, price will move all over the place, and you'll probably get stopped out. So the reason why this happens is that butterflies are what we call vega negative. That means that when volatility goes negative or starts moving down, then the value of that fly starts moving up. But that's not a given. It's not a given at all. It doesn't always happen. I mean, it would be nice if we could figure out when volatility is going to crush, and when it isn't, then we could be more selective on these flies. But overall, you're going to be able to make something or get out with a very small loss, and that can add to your overall profitability over the course of a year.
Thanks for watching, guys. I hope you enjoyed the video, and if you did, make sure you hit that subscribe button and hit the like button below. If there's any questions that you might have for Coach Ernie, make sure you leave them in the comment section. Thanks, guys.